Ron Barron, the millionaire investor, advises not selling your Tesla stock during a downturn. But did you know that some investors like Barron are still optimistic despite the fact that many have lost faith in Tesla's equities as a result of the stock market's disappointing performance? To find out why, make sure to keep watching and tuning in. People everywhere are aware of the severe impact the global COVID-19 pandemic has had on the world economy. This also led to massive companies like Tesla running into never-ending problems. Although Tesla continues to be the industry leader in electric car production, the company's stock, like those of other companies like Apple and Google, has been very volatile recently. Watch today's video to learn why, despite Tesla's dismal performance in the current stock market, Ron Barron advises against selling the company during a decline. As most people are probably already aware, Austin, Texas is home to the American automotive and clean energy business Tesla. Tesla is a company that designs and produces solar panels, solar roof tiles, electric automobiles, and battery energy storage ranging from residential to grid scale. Engineers Martin Eberhard and Mark Tarpenning established Tesla Motors as an electric vehicle manufacturer in 2003. Before becoming CEO of Tesla, PayPal co-founder Elon Musk oversaw the company's early funding rounds. The Roadster, Tesla's debut electric vehicle, was introduced in 2008. American mutual fund manager and investor Ronald Stephen Barron, also known as Ron Barron, founded Barron Capital, an asset management company that specializes in providing growth equity investing solutions. With 52 years of research experience, Ron formed Barron Capital in 1982. Ron was an institutional securities analyst for different brokerage firms from 1970 to 1982. Ron attended George Washington University Law School and worked as a patent examiner in the U.S. Patent Office from 1966 to 1969. Ron was a biochemistry teaching fellow at Georgetown University from 1965 to 1966. Ron earned a bachelor's degree in chemistry from Bucknell University in 1965. Barron Growth, the $10 billion flagship fund of the buy and hold investor with an annual turnover of less than 3%. In addition, Barron owns one of the largest homes in the Hamptons, which he built for a total of $152 million between 2009 and 2009. Now it's worth a lot more. Ron Barron now has a $4.02 billion net worth. According to certain experts, Tesla investors will become wealthy in the second quarter. Considering the way the company's stocks are performing right now, this could seem unlikely. The following, however, demonstrates that Tesla was able to deliver despite the challenges brought on by the epidemic and other international concerns. Tesla announced in April of this year that it had delivered 310,048 cars in the first quarter of 2022, a 68% increase over the same period the previous year. Tesla announced its first quarter 2022 net income of $3.03 billion in the same month, exceeding Wall Street's projections despite an 81% year-over-year increase in revenue to $18.08 billion. Legendary investor Ron Barron has owned Tesla since 2014, long before the company's stock reached record highs for the automotive sector. In reaction to worries raised recently regarding Musk's abrupt move to purchase stock in Twitter, Barron reiterated his optimistic assessment of the automaker and revealed he would be keeping the shares for the majority of the upcoming 10 years. He notes that Musk's Twitter investment is worthless and that he intends to hold Tesla stock for at least the next 8 years. Billionaire investor Ron Barron anticipates that the shares of Tesla will continue to soar for the next 10 years. His firm has already profited $6 billion from its initial investment in the company. The CEO of Barron Capital, Ron Barron, stated that he intends to retain Tesla stock for a minimum of 8 more years during a recent episode of CNBC's Squawk Box. In the aforementioned interview, Barron stated, "I think we're going to make 3, 4, or 5 times our money on Tesla from here." According to Barron, he invested $380 million in Tesla between 2014 and 2016, with an average price of roughly $40 per share. As a result, he has made approximately 20 times or $6 billion in return to diversify the portfolio. Barron has sold almost $1 billion worth of stock in the 2 mutual funds that own it. Currently, 12.8% of the assets managed by the fund are Tesla. I think for Tesla, this is the very beginning of what they're doing, Barron stated. Barron Capital just sold Tesla shares for around $1 billion. And he promptly informed CNBC of this. Still 12.8% of the entire assets under control in his portfolio, or an astounding $6.02 billion are invested in Tesla. With Tesla having recently opened gigafactories in Texas and Berlin-Brandenburg. The automaker's shares have surged dramatically in the last few years. Barron anticipates that in 10 years, the automaker will produce 5 million cars annually, effectively making it the same size as Volkswagen and Toyota combined. In 3 years, he predicted Tesla, which declared that it had delivered 310,000 cars during the quarter, should be able to produce 1 million cars every quarter. Recall that in the first quarter of this year, there were reports that Elon Musk was attempting to drop a Tesla margin loan and secure $6 billion in preferred shares in order to purchase Twitter. Ed Ludlow, reporter for Bloomberg News Global Business Team and on-air correspondent and editor for Bloomberg Television in San Francisco, claims that this move will be astounding because it will reduce a $12 billion margin loan to zero. He added that, given that he had just completed $7.01 billion in new equity financing, there were reportedly $6 billion in fresh equity funding. According to sources, this resulted in a reduction of the margin loan from $12.05 billion to $6.05 billion, often known as a de-risking. Since a large portion of his net worth is comprised of collateralized Tesla stock, which allows him to borrow money from banks against the value of the company, Musk has virtually always joked about being cash poor. Would you follow Barron's recommendation to hold onto your Tesla stock instead of selling it? Please share your thoughts with us by posting a comment below. Despite the fact that Elon Musk's Twitter holdings have alarmed many investors, billionaire investor Ron Barron seems unfazed. Despite the fact that Tesla's shares have underperformed this year, Barron stated in a recent interview with CNBC that investors should be more thrilled about the enormous profits he believes the company would experience rather than Elon Musk's roughly $3 billion holding in Twitter. Even yet, he described Musk's investment in Twitter as insignificant, pointing out that it amounts to just $3 billion for a man with a $300 billion net worth. Although some analysts anticipate that Musk may become even more involved with Twitter, Barron thinks the investment is helping his marketing and that he isn't deviating from his plans for his two businesses, SpaceX, which makes rockets, and Tesla, which makes electric vehicles. As one of Tesla's largest shareholders, Barron has a strong interest in the company and believes that the electric vehicle maker has enormous upside potential. He says he will hold on to the stock for at least 8 more years and still anticipates making 3, 4, or 5 times their money. As already stated, the greatest time to invest, according to Canadian businessman, entrepreneur, author, politician, and chairman of O'Shares Investment Advisors and Beanstalk's Kevin O'Leary, is when everyone else is moving in the opposite direction. He likened this tactic or maneuver to the lemming effect. In psychology, the term lemming effect describes a phenomenon where groups of people in different walks of life behave a specific way simply because most of their peers do. Tech has been cut in half, and yet the growth rates of the companies have not slowed at all, O'Leary stated. He went on to say that there's no proof that the growth rates of mega-cap internet behemoths like Barron have decreased. As early as 2025, ARK Invest predicts that Tesla will be able to produce between 5 and 10 million cars. Star stock picker and American investor Cathie Wood launched ARK Invest, an investment management company with $60 billion assets. In fact, they revised Tesla's valuation model, putting the company's stock price goal as high as $20,000 by 2030 and as high as $4,600 in the best case scenario for 2026. The most recent version of ARK's open source Tesla model predicts a value per share of $4,600 in 2026. Furthermore, similar to Barron, Wood expressed her lack of concern and saw Musk's Twitter ownership as an exercise of his options given the tax ramifications of his wealth management. She claims that Musk is taking this action to cover the aforementioned tax payments. Even Trip Chowdhury, co-founder of Global Equities Research, stated in a written note that Tesla is expected to have a disastrous second quarter in 2022. As per the electric vehicle-focused website Inside EVs, Chowdhury is not your typical analyst who only makes reference to recent headlines on Twitter or utilises models to forecast figures. They claim that Chowdhury is presumably the sole analyst who frequently visits a Fremont factory in person. Furthermore, well-known YouTuber David Lee, whose channel covers every aspect of investment, is still optimistic about Tesla stocks and consistently states that he is in this business for the long run. He continued by saying that, in his opinion, Tesla will have phenomenal growth by 2030. Ultimately, the choice is still yours, and these investors and analysts are just offering their opinions in an effort to assist others in drawing their own conclusions from the information they have provided. See more videos on Tesla by visiting our channel and watching our other films.